Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for January the 27th, 2011. Now our first position for tonight is going to be in March light sweet crude oil contracts. What I'm seeing here is a potential reversal in the light sweet crude contracts. We can see that we have a bit of a double bottom forming here right off of this 86 level. Now, a couple of factors that are coming into play. We have the predicted stochastic and the predicted RSI that we're using from Vantage Point, along with the predicted short, medium, and long-term differences. In this particular case, we can see the predicted short-term difference has turned higher. The predicted RSI has also come down and is also angling back up. Both of these things tell me that crude oil is getting ready to reverse, if nothing else, back to the 18-day predicted moving average from Vantage Point at the $90 a barrel level. Now we've closed the day at 87.33. We're going to be looking for a very minor retracement here. Now our short-term, medium, and long-term crossovers are probably not going to necessarily agree with this trade, but we're going to look at them anyway. We can see that the short-term crossover here is angled back to the upside. Our medium-term crossover here from Vantage Point, we're also going to review that. Now the medium-term crossover again is another very powerful indicator from Vantage Point. Now it's still, you can see it's starting to flatten out here right about around this $88 a barrel mark. And looking at the long-term crossover, same thing. So we're starting to see a pause here. Now we've identified that we're going to get into a counter. This could be considered, may not necessarily be considered counter trend, just to point that out, because crude oil is still in an uptrend. So we're looking for a place potentially to get back into the market long here. Now looking at what's been happening this week, we can see on the neural index we've had 4 consecutive down days on crude oil. Tomorrow Vantage Point is forecasting up. I think this is a very good call. The neural index, the predicted stochastics, the RSI, we're mixing up our indicators here. 86.40 is the level we want to watch for tomorrow to look to get back into the light sweet crude contracts. I believe the dollar will strengthen, but I believe that crude oil will strengthen with it. That's my viewpoint at this particular time. So it's a bit of a higher risk trade. We can see that our predicted short, medium, and long-term differences are all still very negative, particularly the long term I want to point out. But the short term has come down to -74. The medium term has come down to -2.27. So that's a bit of a bonus there. And again, we're not looking for necessarily a long-term move here. What I've pointed out, we want to trade back to the Vantage Point 18-day predicted moving average, just under $90 a barrel. So for tomorrow, we've got 86.40. We're going to look to get into the market long. 88.62 is a very good target area, at which time we're going to take longs off the table, and then that'll probably be it for crude oil for the remainder of the week. Now that's our first position. Our second position, even though somewhat high risk, we're going to have a quick look here at the gold contracts. Now for tomorrow's trade, or tonight depending when you're looking at this, we're going to be looking at the E-mini gold. Again, the April contracts. Now again, I'm starting to see a base form down here on these gold contracts. We can see we've got a bit of a rising trend line here starting. Our predicted short-term differences broke higher. Predicted stochastic crossed to the upside tonight in oversold territory, and our predicted true strength indicator is again hitting the oversold levels. So with this said, there's some opportunity in my opinion that gold, whether if my anticipation is, if what I anticipate is correct, excuse me, that the dollar will strengthen. Gold has been highly correlated to the dollar as of late, which suggests that this time of year that gold and the US dollar will move up or move down together. So looking at this, we can see that there's a number of indicators that tell me that gold, if nothing else, is going to correct higher. We've closed at 1334.70 on these E-mini contracts. 1365 is the 18-day predicted moving average, which would be currently a target area. Now again, I always like to go in and check these crossovers and see if I can find any sign that this thing is getting ready to reverse. Now our short term is not in an agreement at this particular time. We're looking at our medium term. Same thing, but you can see that the angle of the predicted moving average is starting to flatten out, and the long-term crossover again still showing some downward biased, but again these other indicators suggest that if nothing else, we're going to correct higher. So much like the crude oil contracts here, we're going to now go into the daily report from Vantage Point and see if we can narrow this entry point down. Now again, this trade is very highly correlated to those light sweet crude contracts, so I would caution about taking both of these trades at the same time. One or the other, that's the way I would go with this. We can see that it's almost identical. We've had 4 straight down days. The neural index now has also turned up. So for tomorrow, the target area to get into the long position is 1330.50. We're going to be targeting 1349, potentially even higher at that 1360, 1365 level over the next couple of days, because again, I see gold beginning to make a turn here, and if I'm correct, we could start pushing back towards at least the 1365 area. So those are the market positions for January the 27th, 2011. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.